Well, greetings. Thanks for joining us this week for our 6th Financial Roundtable for Schools. Use the chat, say hello. Glad you're with us today. We have a great guest today, Jackie Marcincavage, who's from Lords and Ladies, has some great practices that she's going to share with you today. And so personal welcome for me. And here we are with this roundtable, really trying to make a difference in the school business as we see the importance of the whole ecosystem working together. And so this is week 6. One of our themes is money isn't the most important thing in life, but it is like oxygen on a gotta have it scale. And there's a lot of financial related issues and opportunities. So we try to address those each week. And we're looking for light bulb moments. And we want to give a quick shout out and thank you to our sponsors. Certainly our company Qnity is the lead sponsor on this, followed by Pivot Point, who are great contributors and great partners with us and are really helping to make these roundtables possible. And then also shout out to Lightheart Sanders for their involvement in the great work they do, including their benchmarking project for salons, which we're very supportive of. One of the things that we're going to do today is we're going to have a conversation about key employee incentive plans. It's been a hot topic lately, at least for me and some of the businesses I work with. So I want to share with you just some insights and opportunities and give you an introduction to this topic that I think you'll find very helpful. If you were on with us this morning on the salon roundtable, there'll be a lot of overlap. We're going to change the order of things. We're going to get, first of all, to our guest, a member of our School Brain Trust, who's Jackie, who I'll introduce just in a short minute here. And we're looking for future guests. We're looking for you to get involved and be a member of the Brain Trust, to share your reality, share your truth, and to help elevate the financial performance and practices for schools. We've had great guests so far, Susan, Nicole, and Linnell. We've had Jared. We've also had Carrie Qnity from the Institute of Beauty and Wellness, the schools. And so anyway, the topic that we're going to talk about today has to do with schools partnering with salons and spas. And so we've got with us Jackie. Let's have Jackie come off mute and let's see if we can see you, Jackie. How are you this afternoon, Jackie? All right, so there you are.
Tom.
How are you?
Great. Very good.
Well, I was so inspired by the great work that you're doing. And from your perspective as a salon leader, just some practices that you've done to partner with some local schools. So a little bit about yourself. Why don't we start there? I'm going to guess that the majority of people on this call don't know you, don't know your business. So why don't you do just a quick introduction for us? Then, of course, I'll piggyback on it to add as needed.
My name is Jackie Marcincavage. I work for Lords and Ladies Salon Group. We have 7 locations, salon and medical spas. We are in the state of Pennsylvania. We franchised our 7 locations in September. I had all of the education for the salon and the medical spas, as well as I work for LL Salon Group, which is the management group that manages the salons and the med spas. And I also oversee all of the med spa daily operations.
Gotcha. Well, you know, there's been so much talk about talent and finding great talent, and hear from your perspective and many of your peers, salon and spa owners and leaders from across the country, finding talent, which is the shortage of, is really an important venture and opportunity. And you guys have really done a great job of partnering with some local schools. So let's kick off and let's maybe talk about your model. I mean, you have assistants in your location, 7 locations, and your recruiting and your connection with the local schools have evolved. So why don't you go there, talk a little bit about your relationship with some local schools as well as some innovative practices that have come as a result of the pandemic.
So we partner with all of our local schools. Our 7 locations are spread out into, I'll have to find out the exact radius on that. I might talk myself into a corner, but all of our locations go into a circle, which spread through 2 counties. So we have quite a few schools that we partner with. One in particular, which is a vocational school. It's in both schools are located in one of the counties that 4 of our salon and med spa locations spread through. I did instruct at that location for 1 year prior to working for Lords and Ladies. I have my teacher's license, my cosmetology teacher's license, and we have a full-time recruiter. Her name is Ashley. So Ashley and I joined forces, teamed together, and we created these strong relationships with all the schools. The one vocational school that I'm going to talk about in particular today has 2 campuses. As I mentioned, I taught at one. So we had some staff that I taught and is still with us. We have some longevity there. And the 4 instructors from the 2 campuses came to us during an occupational advisory committee meeting, which I'm going to assume most of you in most state, I don't know, I don't want to speak of any state outside of Pennsylvania because it's not my expertise, but in the state of Pennsylvania, the occupational advisory committee meetings are required by the state so they continue funding the schools. Placement is also very big with the schools, the percentage of placement. 90% of our assistants come from these 2 campuses. So during the pandemic, when schools were closed, when schools reopened, these 2 campuses in particular were not able to continue their clinical practices, as well as with the pandemic shutdown. Girls that were seniors in high school were not going to be able to complete the hours required by state board. The Pennsylvania State Board passed that they would allow any school in Pennsylvania to have one of their students complete hours in the salon setting with a mentor. So we obviously jumped at that opportunity, again, with this relationship we have with the schools. And we also extended it to any school that we partner with, that this is something that we would do for their students as well if they were an employee of ours or if they were not an employee of ours. So initially, the State Board of Pennsylvania passed that the student could compile 350 hours with us. It then went on into a 650-hour thing because of the pandemic. I know that the instructors at these 2 campuses are trying to get this passed by the state board in Pennsylvania to be a continual thing. So our 7 locations all took advantage of this, as they all have employees from these 2 campuses. And the assistants that are currently hired with us started to watch. We have a tutorial, we have a library. I think it's about 60 videos of hair cutting and coloring, balayage and highlighting. And these assistants, students, working with a mentor, whether it was the salon owner, if it was a stylist, if it was one of our educators in that location, they started to do these step-by-step videos in the salon, gaining hours towards their state board, towards their requirement from the State Board of Pennsylvania, which is 1,250 hours. It was great working with this vocational school because the school was thrilled that we were going to give these students these opportunities. So the administration jumped right on it. They did all the legwork in reporting hours to the state board and making sure that the students had good attendance and checking in with us. So it was amazing. It was awesome. The students really, really enjoyed it. Clients got to see the students. And the best part of it was that the owner of the location got to work hand in hand with the student. 5 of our locations, the owners still offer hair services to clients. So it was an amazing opportunity for both the schools and for us as the salon.
So for schools, placement is so important, of course. So how has this helped with placement for the schools, for the students, and for your business?
So we have these assistants, they're still in school and they work for us. So when they went back to school and with their fellow classmates that were placed in a salon, that the salon didn't want to participate, maybe they didn't have the resources to do so. We did have some students that weren't employees of ours that came into one of our locations and then ended up getting hired. One location in particular ended up hiring 4 students that weren't employees of ours that came in and were able to accumulate these hours. So they ended up hiring them as employees.
Yeah, it's amazing. Yeah. And, you know, the other thing that you mentioned is that when they're on site, they're working with licensed professionals that work at the company, work at, you know, one of your locations. They have the opportunity to connect. The owner gets to see them and they get to see the owner. And then they also get to work with peers that are maybe 1 year ahead of them. So, God, it just has to just drop several of the barriers that might exist for a student. You know, certainly internships isn't necessarily a new idea, you know, but I think taking it to the level that you're doing is incredible. And it's been so successful. One of the things that I've seen in working with salons for as long as I have is that salons say they do a good job of integrating with the schools, but they really don't, or they're not taken to the next level. Do you want to comment about that?
We've gotten that feedback from the schools that we partner with, that the pet peeve from the school is that, you know, salon owners will let me know when I can come in. So Ashley, I believe, is now planning for the 2021-2022 school year. Like, she'll plan all the visits that are going to take place. And we do at least once a month at each school we partner with. We have a stylist from from all 7 locations that will go into those schools. We have sign-up sheets, and stylists at any level with us can go in and demo for the students or anything that they're looking for. So we have pre-planned visits with the school, as well as if the school calls us, emails us and says, you know, we're looking for this, more instruction on this, we will go in, we find staff that will go in to do that.
You know, and your performance is outstanding. I've had a chance to work with your business. And I think one of the reasons that your performance is so strong is that you've always done well at recruiting, and many of your competitors it's one more thing they do, you know, and it falls through the cracks. I actually remember working with an owner who's up in Canada, and I was with his business partner. And his job was to go in. He was the hairstylist, and the other owner was the business person. And his job was going to the schools. But when you looked at his calendar, he hadn't been to a school in 9 months. And so we challenged him, pushed him a little bit. You got to be visible. You got to take advantage of this. And so shout out to you to really being very proactive on this. So now we have school owners and managers on this. And you know, it's in everybody's best interest to set the students up for success all the way through placement. Do you have any tips or any recommendations for schools based upon your experience? Because you've also been an educator or an instructor. So you're speaking to school owners and managers. Any advice for them?
During the advisory meetings that we attend, what I love is that the instructors, when they ask, what's lacking, when you get students from us, what do you feel is lacking? They're very open to our feedback. And what I was mentioning to Tom this morning is that this vocational school that I keep referring back to, their one instructor is actually coming. She's starting tomorrow we have about a 5 or 6 week program that the girls that got the opportunity to start it ahead of time, this instructor is coming because she wants to learn the techniques that we teach them at the salon level so she can start integrating while they're in beauty school. So I feel like that has been such a win for us. And because we created this relationship, that the schools are very open to things that, we feel as though, could be strengthened, or things that we spend a little bit more time on. So I feel like that is definitely something that is created a win-win for the schools that we're in partners with and us as the business.
And, whether, obviously we've got people from a variety of different states on here, and neither you or I necessarily know what they can and cannot do. And so many might be on this call saying, well, we love this idea, but we can't go that far into an internship program like this. But there's so many different ways that salons and schools can interact with each other, regardless of what the state board allows, and Jackie, I think that the commitment that you and your company have in the recruiting process is amazing. It's a best practice, which is one of the reasons I wanted to bring you here today. And I really felt that this was a conversation to have with salon owners, which we did this morning. And several of them they woke up a little bit in terms of taking advantage of schools more. And the whole placement piece is so important. It's even going to be more important. So I love these type of partnerships. And again, I want to congratulate you and Ashley and everybody else at Lords and Ladies for your good work and for how you've made this happen. Jackie, do you have any other final comments? You've been double dipping today. I had you for the Salon Roundtable. I asked you to help me this afternoon also. Anything else that you want to say?
No, I really just appreciate the opportunity, and I was lucky enough to meet Tom and get involved with Qnity, and I think it's such a huge resource for us, and we just really appreciate all the connections we've made and everything that we've got. We were very fortunate to be able to work with Tom one-on-one, so thank you.
Oh, thank you, Jackie. I appreciate you saying that. All right. Well, listen, I've already worded this to you once. I've got to move it over here because now I have this new blurred background. I got a new Mac, everybody, so I can have a little better technology. Anyway, Jackie, we officially award you the $1 million light bulb. So that will be forthcoming to you. So thanks for being part of the Brain Trust. And I think what we'll do is we'll have you back as this program continues to mature and all of that. But again, thanks for joining us today.
Absolutely. Thank you. Have a great day, everyone.
All right. Excellent. All right. So the next subject I want to get to is it'll be about a 10-minute segment. And the subject really relates to key employee incentive plans. And I'm very mindful of the business practices of schools as small businesses and the need to retain talent at the school. And I spend a lot of time working with businesses to help them with retention of key employees. And in certain cases, that leads all the way to a transition plan. I do a fair amount of transition planning work where oftentimes there might be a scheduled transfer of ownership over time to a key employee or a family member. And sometimes key employee incentive plans fuel this. So what I'm going to give you some nuggets, some keys to success, keys to success, as well as maybe some cautions, opportunities, recommendations as it relates to key employee bonuses and incentive plans. So, all right. Now, first of all, the first thing to consider is why you're even considering this, why you'd even consider having a key employee incentive plan over and above their normal compensation. Now, many of you might have a bonus plan for your directors. You might have an incentive plan, but I want to talk about maybe taking it to another level. So one motivation, probably the top motivation, is to keep, retain top talent at the school. It's hard to find talent, it's hard to keep talent. And so certainly key employee incentive plans are a great mechanism to create a reward structure that acknowledges the importance that a key employee has to the business, and it creates financial related incentives around that. Now, I should say at the very beginning that this is somewhat of a dangerous topic because we very well might have an owner and a key employee. And the key employee might literally be sitting there thinking, what's in this for me? And how, I'm going to now go back to my owner and say, I need something like this. So what we don't want to do is we don't want to do harm here. We don't want to create an environment where an owner feels blindsided because a key employee was on our session this morning, all of a sudden come back, we had the session and you need to create a key employee incentive plan for me. That's not the intention. So several recommendations on this. Number one is find out what your motivation is. Is it to keep top talent, or is it part of some type of long-term transition plan? And it is a very effective technique that is part of a transition plan. Who should this be for? Well, key employees really are subject to your own definition. And these type of plans are what's referred to as non-qualified from a tax standpoint, which means you can pick and choose who it's available for. And it's not subject to any special regulation, unlike certain qualified plans that might be a 401k, for example. Some things that you really need to consider is, first of all, what type of benchmarks will be used that will be the basis of a key employee incentive plan. And those benchmarks should be financial related and performance related. The simplest and the most direct and most common is to have it based upon the profitability or the incremental profitability of the business, of the school, whether it's a single location school, multi-location. You can do it for, if it's the key employees only at one location, fine. If it's someone that is involved with both or multiple locations, that's fine too. But usually profit is the recommended benchmark. Now, as it relates to profit, that one word means multiple things. We recommend that a P&L should be broken down into several sections that has profit: gross profit, net operating profit, and net profit. One of the concerns sometimes that will come with a key employee incentive plan is owner-related compensation and decisions that the owner may wish to either keep private or may want to remove because it can become noise and a distraction in someone's bonus plan. So oftentimes we'll have it based upon either net operating profit. So that would be profit before things like owner's compensation and other things that are non-tangible, such as depreciation, et cetera. Another, and this is also a really great benchmark to use, is based upon what we call contribution margin. Contribution margin is its own unique measurement of profitability, and it's a mini P&L that's really made up of sales minus controllable costs and expenses. So certainly we're going to need some type of benchmark to serve as a basis for any key employee incentive plan, and profitability is the most common. It also could be based upon sales or some other metrics. Another very important piece to this is the key employee must be able to impact this benchmark, and they must be able to see how they can impact profitability. So impact, it's great to have an incentive plan, but if the employee can't impact that number, it's counterproductive. Next, this is a really important piece, especially if you're a key employee, it needs to be self-funding. This can't be something that you're going to try to just slip into an existing budget. It has to be incremental performance so that the key employee incentive plan is self-funding. Next is it needs to be significant, and significant enough that they pay attention and the reward is high enough for them. Now, there is a way to make it even more significant. I'll get to that in a moment, as it relates to deferrals in future years. So significance is another key to success. It also needs to be achievable. There has to be within the realm of possibility. Bonus plans that are unachievable are ones that people just ignore and give up on, and it can actually be almost demotivating, which is a really important point here. As it relates to key employee incentive plans, it needs to be very well designed or not done at all. You're better off not having it as opposed to having one that's not well designed. So simple is very important, and it also needs to be easy to track and measure so that the key employee can be able to see the results and track. This does bring up the subject of sharing financials with members of your team, and owners have different philosophies on that. Many will employ something called open book management. Some prefer to really keep the financial statements very, very private amongst a very small group on a need to know basis. So that's the beauty of something like contribution margin. You can really do baby steps in terms of sharing financial information off of P&L by not sharing the entire P&L, but just sections of it. So again, easy to track, easy to measure, and can impact. Communication, it needs to be very well communicated, it needs to be in writing, and if there needs to be frequent check-in points. Sometimes the bonus plan will be communicated, here's the bonus plan, good luck, and then there's no dialogue on it. Certainly once a quarter, there should be discussion on it. And speaking of quarter, I do recommend that profit-based bonus plans be based upon a quarterly basis, but also go out into the future, which again, I'll get to that in a moment. Now, here's a big nugget, and this is a piece to really keep in mind. A way to make the key employee incentive plan more lucrative and more significant for the employee is and also to create retention mechanisms for the key employee, is to have some of it short-term and some of it long-term. What I mean by that is that you can create a bonus plan that has a portion of it deferred into a future year. Put into a separate account, and the employee will vest that particular award over time. So for example, you create a profit-based incentive plan for a key employee. You want to make sure that there's an opportunity for the key employee to be able to earn more extra cash as a result of that, so their earnings can grow within the current year. But you're able to make it more significant and increase the stakes by saying, okay, part of it, and perhaps even 50% of it, should go into a future year. So go into an account, and then over usually at least 3 years, anywhere from 3 to 5 years, that deferred award be released to the employee over time, which is a great opportunity for the employee to earn some extra incentive over time. And it also is a great retention tool, so the employee sticks around. Now, deferrals also create some tax benefits because the bonus is not income to the employee until it's paid, which also means it's not deductible by the employer until it's paid. So you're also able to be very disciplined in your performance metrics by not trying to slip a large bonus plan into an already crammed P&L. Another key to success is it shouldn't be for status quo performance. It should be for incremental performance. It can be for team, or it can be for an individual. Individuals tend to be simpler, but you can also create pools for a small group of key employees. Having a short and a long-term element to it, I've already mentioned, and most bonus plans that I see are only very short-term. They're only within the current year. They don't look out in the future. They don't have a deferral element to it, and they're missing an opportunity. Another recommendation is to use the bonus plan as a catalyst for education so that the key employee not only is learning how they can impact it, but they're also learning financial literacy and financial performance and really understanding the business. So what happens is if a key employee has a bonus plan that's based upon profitability and impact, the owner then has the opportunity to use that as a teaching mechanism. We have a profit course where we teach these kind of things, and we have several key employees enroll in our profit course, and many will design a bonus plan at the same time, include education, so they understand how they can impact it. Now, another thing is with the key employee incentive plan, it does open up the door for tighter financial practices by the school. And also does open up the door that because someone's pay is going to be dependent on these numbers, it means a higher degree of rigor as it relates to interim financial reporting. I'm not talking about annual performance where you do your audit and all that, but I mean for internal financial management practices. It does force an upgrade in your practices. It also does force businesses to do a better job of budgeting. Other things to consider when you look at a key employee retention plan is also the risk of doing it wrong, the risk of demotivating other people. So first of all, as it relates to the risk of doing it wrong, you should definitely do some financial modeling around this. You should put it in writing. You should be very deliberate in this. This shouldn't be a knee-jerk reaction. Hey, I had this great idea doing key employee incentive plan. Here it is. You want to design it very carefully. And then the other thing as it relates to other employees, businesses can follow under the function of a need to know basis. Who really needs to know that you have a key employee incentive plan for each individual? In most cases, very few people in the company. What some companies have done is they've created very specific criteria and gone public with them and the team and saying that we do have key employee incentive plans and it's available to people that reach the 10-year mark or whatever. So there are ways that you can communicate this to the entire team and clarify who would be eligible. But usually, even in an environment of open book management, there should be great discretion involved in terms of other people being aware of each other's paychecks. So certainly keep that in mind. Now, as it relates to key employee incentive plans being used as part of a transition, just in the last week alone, there's at least 3 situations I'm involved in where we have an owner who is ready to transition the business to a key employee and or a family member. I'm seeing something come up here, and I'll get to. I got a question coming up. So anyway, transition plans. So oftentimes, whether a small business wants to sell to a key employee, the biggest challenge is the key employee probably doesn't have money, and so it's very common to use key employee incentive plans as a mechanism for a key employee to earn ownership over time. So 5% a year for X number of years. And once the threshold gets to say 20 or 25%, that could trigger an opportunity for that key employee to buy the remaining shares of the company, because now this key employee has built equity over time. They understand what it's like to be the owner of the business. It also gives them time to build credibility if they're going to go to a bank or the SBA. So certainly we're seeing key employee incentive plans as a great opportunity and a great mechanism for a buyout. And the design mechanisms have a lot of the same features of what I already mentioned, based upon performance, incremental, self-funding, make sure you're able to get the information, well communicated. And the big difference is, rather than the incentive being in the form of cash, the incentive is in the form of ownership interests. So for example, key employee is able to earn a $20,000 bonus based upon performance, incremental performance. That $20,000 then can be used instead of coming in cash. it can be used to trigger the purchase of shares for a key employee. So anyway, I think this is a topic I get a ton of questions on. There certainly should be legal and tax considerations that are brought into this. There should be modeling. And so that is really what I wanted to share with you. Are there any case studies of the effect of key employee incentive plans? Yes, Melissa, there is. And in fact, if that's an area of interest for you, we do have case studies that are built into our course. It's called a Profit course. But just staying shy of that, I'll give you an example right now. We have a California-based business who implemented a key employee incentive plan at the beginning of 2021. And what it is, it has a monthly sales bonus, of which other leaders are also part of a monthly sales bonus, and they'd had that for a while. But the new mechanism is a quarterly based profit plan, and it's based upon a certain profit target. In this particular case, it's based upon 10% profitability. So if the business has 10% profitability in the quarter, what that does is that triggers a cash reward equal to, in this particular case, it's $1,500 a quarter. It's a smaller business. And so each quarter, this key employee has the opportunity to earn $1,500 more. Has nothing to do with ownership. It's just key employee cash bonus. There's also an extra $1,500 if the annual performance is 10%. So there's basically 5 different trigger points, 4 different quarters, and then a separate and additional award for the year. Now, back to the case study, Melissa, the owner has reported an immediate increase in accountability, a immediate impact of actually thinking and acting like an owner. This employee has earned for the first 2 quarters of this year. This key employee is very motivated because of this, and it's worked exceptionally well. Other case studies, Melissa, to your point, as it relate to a buyout, yes, we have several examples of how a key employee, thinking of a business in Atlanta, Georgia, who over time, we used a key employee incentive plan for this key employee to buy a 2-location business, and it's worked out tremendously well. So Melissa, I hope I answered your question. Any other questions, guys? Any other comments about key employee incentive plans? You are welcome, Melissa, or anything that Jackie mentioned. So we'll open it up to chat here for a little bit here. And then I think what we'll do is we will move on to, we'll wrap up and be back together next week. I will have a guest next week, and we're going to be getting into some great topics in upcoming weeks. So any other comments, please type it in the chat. Otherwise, what we'll do is we're about 41 minutes after the hour. Usually I like these sessions to be anywhere between 40 and 50 minutes. So I think I'll wrap. Let me just see if there's any participants that have any other comments. Nice to see you, Alcott and Christine and Sissy and Dawn and Diane and Jessica and Julie and Lisa and Mark and Matt, Melissa. Hello, Michael. I'm glad you joined us. Nicole, Sharon, and Terry. So guys, thanks for joining us today. Let me see if we have any other comments. Michael, yes, nice to see bonuses tied to profits. Amen, my friend. And okay, I think we've answered all the comments, guys. Thanks for joining us this week. I hope you enjoyed it. We will have a significant announcement next week. So announcement coming next week. Be sure to join us. And we're going to have some great guests joining us. And thank you for being part of the School Roundtable. Thanks much and have a great rest of the week.